The broadcast is now starting. All attendees are in listen-only mode.
Hi, this is Tom Lane, DM2 Software's Vice President of Sales and Marketing. I would like to welcome everyone to today's Internal Controls While You Work webinar. This is part 2 of a 3-part series. Before I introduce today's presenters, I would like to go over a few housekeeping items. Because of the number of attendees we have on today's webinar, everyone's phones will stay on mute. If you have any questions during the webinar, please enter them into the chat window that you see in the lower right of your screen. We'll try to answer everyone's questions towards the end of the webinar. If we're unable to get to everyone's questions, we'll follow up with you individually after the webinar via email. Today's webinar is being recorded. As soon as the recording is available, we will post it on our YouTube channel and put a link on our website for the presentation, and then send you an email to let you know when these are available to be viewed and downloaded. On that note, I would like to introduce today's main presenter, Patty Hendrickson, Professional Service Consultant for DM2, and she will be giving you an overview of our internal controls, the tools that you can use while you work. On that note, Patty, take over.
Thank you, Tom. I'm Patty Hendrickson, and please join me and the rest of our team, Cade, Steve, and Laurel, in our adventure in learning about internal controls while you work. Thank you for taking the time to join us today and learning more about internal controls. Last time we had covered after you had updated your transactions and internal controls related to that. Today we're focusing on in-process transactions, and we'll cover an overview of internal controls, order of operations, process documentation, and key pre-update controls and reports. Just a review, internal control is a crucial aspect of an organization's governance system and its ability to manage risk. It is also fundamental to supporting the achievement of an organization's objectives and creating, enhancing, and protecting stakeholder value. High-profile organizational failures typically lead to the imposition of additional rules and requirements, as well as to subsequent time-consuming and costly compliance efforts. However, this obscures the fact that the right kind of internal controls, enabling an organization to capitalize on opportunities while offsetting the threats, can actually save time and money and promotes the creation and preservation of value. Effective internal control also creates a competitive advantage as an organization with effective controls can take on additional risk. Despite the existence of sound internal control guidelines, it's often the application that fails or could be further improved in many organizations. For purposes of this presentation, we are focusing on control activities, specifically process controls as they relate to DM2 and Sage 100 ERP. Data entry processes' final destinations are your financial and transactional reports. Having good process controls allows you to have consistent and accurate results. Process controls drive the revenue and costs on the income statements process. Process controls also drive the balance sheet values through inventory, tax accruals, adjustments, and purchases clearing. Business intelligence data, such as the DM2 SQL data warehousing, require process controls for accurate and consistent results. Reports such as margin analysis, sales analysis, and purchase analysis rely on these processes to be consistent. Asset management requires you to balance the need for the product availability with the need for minimizing working capital. No one goes to the store who's always out of their favorite product, but just having the product isn't enough to bring in customers. Just ask anyone at a retail store. These critical business elements are only as accurate as your process control procedures. You can only report and analyze what you capture. Database management is the creation and maintenance of a database. Your DM2 Sage 100 ERP database is made up of data files and fields within those files. On the screen here, you can see an example of the inventory master file. The file name is CI_item, and that is the actual file you would find when you're looking using Windows Explorer. The data fields are stored in the file. Some examples in the inventory master file are the product description, the product line code, volume, weight, and more. One thing to note is just because a button on the screen relating to the master file doesn't mean that the information is stored in the master file. There are often subfiles that store the information. For inventory and the inventory items specifically, the pricing button has its own separate data file. And the quantity button, which shows you the quantity available by warehouse, has its own separate file as well. Database management is the result of a large number of transactions and records being constantly maintained and updated. Here are some areas that you should be regularly maintaining and checking for accuracy. For customers, their addresses, phone numbers, or new ship-to location. For inventory items, ones that are no longer available from the supplier, or new items as they're added from your suppliers. Supplier cost changes, which often result in DM2 pricing changes for your customers. Tax rate changes or new tax jurisdictions. New suppliers, new supplier products, or new supplier rack and pickup points. New plants or sites, either built or acquired. New or changed salespersons. Product transfers from locations. And if you want to change the amount of stock you want to keep on hand. When changes are made, there are some things to consider. If you have less than 100 records to change, manual entry is the best method. New records can often be copied from existing records. Manual entry is most efficient for the small-scale changes. When making larger changes, Visual Integrator is your best friend. Exporting data, updating, duplicating, and validating data can be done in Excel, Access, and other databases. Then the data can be tested and re-uploaded into your DM2 Sage 100 ERP system. Once you have been trained in Visual Integrator, you will learn the many ways that you can use this feature to provide large-scale updates to your software. If you do not have Visual Integrator now, you may want to check with your sales representative on how much it would be to add this to your existing software. Please keep in mind this is a summary of the steps to import data. Backups and testing is crucial in this, a crucial step that must be taken with any import. Whether done by yourself or a DM2 consultant, we highly recommend training with a DM2 Professional Services Consultant to start using Visual Integrator. Our professional services team can always assist by writing, executing, or assisting imports as you need. Finally, there are some other system utilities you can use to update your database. The AR Global Field Change, the Cardlink Global Field Change, the CFN and Account and Card Updates, Petrolink and Bill of Lading Global Fuel Tax Updates, Inventory Product Line Maintenance Defaults, and the TaxLink Data Field Import. The order of operations are rules that govern which mathematical operations are done first. Some of us grew up memorizing PEMDAS, or please excuse my dear Aunt Sally. Do operations in parentheses and other grouping symbols first. If there are grouping symbols within the grouping symbols, do the innermost first. Do multiplication and division of operations from left to right, and then do addition and subtraction operations from left to right. Order of operations is something that applies to much more than our business practices. It also applies in nature too. Since it's finally becoming spring here where I'm at, I thought I would share an order of operations quiz based on plants growing. Take a few minutes to identify which steps in the drawing above come first, second, and last. If you guessed 2, 3, and then 1, you're right. If not, you're probably like me and don't have a green thumb. Sometimes I just skip steps 2, and 3 and ask for step 1 for Mother's Day. Fun fact, while looking up online why the order of operations is important, Ask.com reports the order of operations is important because if you do the operations in the incorrect order, you will not come up with the right answer to the problem. You must first start with the correct number and the correct process to end with the correct number. Another way of putting this is garbage in, garbage out. The U.S. Department of Energy released a report in August of 2010 on efficiencies and effectiveness. They claim the #1 way to achieve operational efficiencies and effectiveness is through the use of the proper order of operations. Record what you have done in the order you did it. You did not deliver a pail of oil to a customer before you had to put it in your possession, but only after it was in your hands and you could physically deliver it. So in the accounting system, you should always receive the product into inventory at the correct cost before you charge your customer. If you were to ignore the cost of the product, you may deliver the product to the customer and charge them less than what you had paid. And no one stays in business very long with a model like that. A joke that has been rumored to run around a famous Fortune 500 company is, we may lose a little bit on each item, but we'll make it up in volume. All jokes aside, order of operations ensure that costs are updated first. Printing negative inventory reports before updating invoices audits this process. This allows the average cost to be preserved, and the FIFO and LIFO tiers if you're using those costing methods. Additionally, by receiving your inventory as they are put into stock, you are reducing the amount of time between the accounting event and the accounting transaction entry. Thus, there are less errors in receipt entries, and research is more easily accomplished. This results in reducing inventory write-offs and assists in keeping inventory and GL in sync. To follow the proper order of operations, it's really quite simple. Buy and receive your product before you sell it. Rinse, lather, and repeat. Just to be sure, let's repeat it. Buy, sell, repeat. Using the proper order of operations, any pre-sale transaction should be processed in your inventory and completed before you process the sale of the item. For example, receive the finished product or the raw materials. If you do manufacturing or repackaging, enter in the repackaging or the manufacturing entries first to make the finished product. Finally, if you transfer the product to another warehouse before it's sold, process your internal transfers before you sell the product. Following these simple rules allows you to have the correct cost, quantity, and availability in the correct inventory item and the correct warehouse before your sales occur. When selling the product, DM2 Sage 100 ERP has a negative inventory report that will print and halt your invoice updates if you do not have the proper inventory available. If you do not have this feature turned on, please take a moment and go to your Petrolink or fuel tax accounting module. In the Setup menu on the Options feature, on the first tab, there's a question that will turn on this feature. When you first activate this feature, you may want to just print the report and research the issues. Once you've gotten your team on track and everybody knows how to correct the negative inventory issues that have occurred in your organization, you can turn on the feature that will halt the update if the inventory is negative. If you have questions or concerns about this feature, please contact your DM2 Professional Services Consultant. Using this feature may be the best thing you do for your company this year. Once you have processed all of the pre-sale inventory transactions, the packaging, the warehouse transfers, the adjustments, and the issues, you can continue with sales order invoicing, and the proper cost will be assigned to the invoice. Part of the order of operations is doing daily work daily. You purchase the fuel daily, you repackage your inventory daily, you sell your inventory daily. Why don't you process your transaction daily? The main reason we hear is because it's difficult to coordinate the order of operations within the organization. Some best practices we recommend are to set a schedule when processes are to be completed and send out an email when they're actually completed. One of the most common areas we hear this in is repackaging. The warehouse waits until the end of the month before they enter in all of their repackaging entries. One way to help resolve this is by preparing a checklist for the warehouse team for their daily tasks and include entering repackaging. Employees are not to clock out until the checklist is complete. By processing your daily work daily, the billing can be done on time. Cash flow will be coming in quicker as people receive their invoices sooner. I'm going to put in a shameless plug for Outbox here, because if I bill yesterday's work today and I use Outbox, my customer has their final invoice in hand the next day, which means they can pay me even sooner. Another thing to note is that invoices waiting to be invoiced on your desk are not included in the credit checking process. So the sooner you finalize those invoices, the credit checking will be updated with the correct invoice amount. This gives credit a better picture of the outstanding invoice and can help them prioritize their collecting efforts. By processing your inventory receipts, counts, and packaging daily with the quantity on hand and the cost of the inventory and the items in the warehouses are correct. Additionally, when month end is just processing one more day's work and validating the work for the month, the process goes much quicker. We have seen customers reduce their month-end processing anywhere from 10 to 30 days by processing daily processes daily. By processing daily processes daily, sales reports can be viewed today to see how the month is shaping up as of yesterday. Both in the sales detail file in the DM2 SQL Data Warehousing Solution and Profit Link, they allow for these transactions to be built up day by day. This allows managers, salespersons, owners, operational teams, and accounting teams to react more quickly to sales, customer retention, purchase order quantities, potential runouts, and more. The advantages highly outweigh the disadvantages. So will you take this challenge? Our consulting team would be happy to help you through the steps necessary to start processing daily transactions daily. Another key control is process documentation. Having your key processes documented is important for consistent and accurate data results. We recommend that you focus your documentation around your automated processes, your manual processes, and exceptions to the rule. There are many different ways to create process documents. ISO 9001 provides standards for the process flowchart. There are several software options available for process flowchart maps, including Microsoft Word, Visio, SmartDraw, Giphy, among others. The important thing that is just as important is that as the processes change, the flowcharts are updated as well. A narrative example is a great way for new users and employees to feel comfortable with all of the steps. This document includes the who, what, when, where, why, and hows, and includes details on what to do if there's an exception. Checklist documentation methods display minimal information but allows the most important tasks to be marked as completed, and it includes a clear list of steps. While there is no information on how to handle an exception, it allows the person to refer to either the narrative documentation or contact a supervisor to find out the next steps. A great book to read to learn more about how transformational checklists can be for your organization is the Checklist Manifesto, How to Get Things Done Right. It's a quick read and encourages you to take the next steps to improve your organization through checklists. Sage 100 ERP help files can be used as a basis to develop your process documentation. In the screen here, I click on the question mark button on the lower right hand of the screen, and I have several popular options listed. If none of these options fits my need, I can click on About This window. When I go to About This window, it brings me into the Sage 100 ERP Help Center. I can select the task I want for more information about. For instance, recalculating the customer's aging. Sage provides a step-by-step instruction on how the software works regarding this feature. One very important thing to note is the help files don't know how your company does it or what options to select to best fit your company's needs. Do you process your invoices by truck or register? Do you balance gallons to an outside source? This information will need to be supplemented by your team. And always keep in mind that a picture is worth 1,000 words. So if you want a brief but detailed documentation, screenshots are key. The purpose of your documentation guide is to communicate the process management guidelines to support a specific process. The document essentially serves as the source of guidelines to be followed for your entire organization. The guide can be used by a wide range of audiences, different business units, partners, customer service, and anyone who's involved in the process outlined in the guide. Your guide can certainly include more information than what's outlined here. Always keep your organization's needs and interests in mind when you create a process documentation guide. Take a look at the basic tasks in creating your process documentation guide. Create a scope statement. Craft an applicability matrix. Explain the product or service lines impacted. Include the roles involved in the process. Document process management system procedures. Establish an exception management process. Include a decision matrix. Each of these will be in a section in your guide. You can use Microsoft Word or another word processing program to consolidate it. We recommend using a program that allows you to generate a table of contents that will update when you update your headings and your pages. It's also important to assign a clear numbering system within your document. You'll want it to be easy to track changes, and it'll be easy for people to read and use. And now please welcome Steve to talk to us about the key pre-update controls and reports for the fuels business line.
Thank you, Patty. First report that we're going to go over is the open sales orders by promise date report. With the open sales orders by promise date report, you can get visibility into what orders are still not fulfilled and invoiced based on date criteria that you select. Most typically, you would want to go ahead and look at open orders that have a promise date of prior to the current date. This report will give you an opportunity to verify with your drivers why the orders weren't fulfilled. Various reasons could include customers changing their mind and or canceling their order, or they're requesting a different delivery date, or possibly the fuel was delivered and your drivers owe you the paperwork. The sales order and quote history report can be ran with a variety of selections. One of those selections is to view only canceled orders. It's useful to review canceled orders to understand and to quantify the reasons why the orders are being canceled. A number of cancellation reason codes can be set up, and the report can be filtered based on those reason codes. This can help identify logistic and or procedural issues that can be addressed and then improved in order to better serve and retain your customer base. Credit checking. Within sales order entry, DM2 software can check a customer's credit status. There are multiple methods to choose from during your AR setup. Credit check can be done by just the customer's credit limit, by open balances in each aging category on the customer's AR aging, or a combination of the two. You can also set the tolerances to warn order entry a customer is on hold, but not place the order on hold until the customer goes over a tolerance factor, amount, or aged category. As we see in our example, the customer has an order total of $4,351.51. Once the order has been accepted, the credit limit exceeded window will appear, giving you a recap of why the order has been placed on hold. You'll see how much the customer is over their credit limit, again, which will be based on your setup of utilizing credit limits and/or aging categories. This will stop you from the ability to print the order and move forward in processing it. On-hold customers. Customers can be put on hold for all orders by placing them on hold within the customer maintenance window. If a customer is on hold, the customer service entry representative will see this on-hold message window appear immediately after entering the customer's ID and moving to the next field. When you do have on-hold situations that arise during normal course of business, designated personnel will have the ability to review the customer's account and, when deemed appropriate, release the orders from hold in the sales order hold release window. I'm going to go ahead and hand it over to Laurel, and she's going to go ahead and take you through the bill of lading processing and associated sales order processing reports. Laurel?
Thank you, Steve. I'm going to start with the bill of lading journal. The reason you want to look at your bill of lading journal is because it provides you with a lot of data that is critical to getting accurate financial reports. You're going to want to review each one of the reports that print out when you are updating your bill of ladings and sales order journals. Things you will want to verify on this report. Are your products correct? Do the gallons on this report balance to your bill of lading gallons? Are your warehouses correct? And is the cost price field correct? In my example, there is a cost that is out of line and pretty obvious if you're reviewing your journals. When you see a problem with this journal, you should stop and research why so you can correct the problem before moving on. I'm going to leave this bad data in here so we can see what happens. On the next slide, we have our bill of lading fuel tax journal. The fuel tax journal lists each item and all of the fuel taxes associated with that item. The second column shows the cost of your product, and the third column gives you the total of the first two columns. This report needs to be reviewed to verify the tax associated with each product is correct. This can be done quickly by scanning down the tax column to see each tax type and the rate. I found that most employees are very familiar with the tax rates that go with each product, so scanning this report shouldn't be a problem. On the next slide, we have our bill of lading freight register. The bill of lading freight register report provides both the freight in and freight out amount. When delivering to a customer, do you upcharge them? If so, you will want to review this report to make sure you are charging your customers more than what your freight in rate is costing you. If you see zeros on this report, you need to be questioning why. You may or may not charge your company-owned bulk plant and card locks freight out. If you do not charge the freight out, then you would expect to see zeros in the freight out column. Either way, you need to know what is expected to be on this report so you can verify that you are charging your freight in and freight out correctly. The next slide, we will have our inventory register. The inventory transaction register provides you with a report that will show you the products, warehouse, quantity, and unit of cost. My example shows you the issues register. You will note that the reference item number has been changed so that it goes in order of how the transactions post to your inventory. The receipt register would have a reference number of B0003521 since it was posted first, and the issues register, that's in our example, has a reference number of B0003522 showing it posted second. This is very handy when researching problems. It's also important to verify that your inventory warehouses are correct. If you're distributing fuel to your company-owned warehouses, you want to make sure you remember to distribute the fuel to the correct warehouse. This report provides you with one more double check that you have entered your bill of lading information correctly. On the next slide, you will see that we have moved directly on to our sales order journal. With the unified bill of lading, we do not update the bill of lading DTR before reviewing all of our sales order journals. Instead, we move directly to the sales order journals. Here we have the sales order daily sales order sales journal. This report recaps each customer you are invoicing, giving you their tax schedule, taxable sales amount, if there are any non-taxable sales amounts, discount, freight, sales tax amount, and the invoice total. Basically, this journal is summarizing each invoice. If you are reviewing this report and you find something wrong, say you are expecting to see 3 invoices on this report and there are only 2, you can stop at this point and go back to your bill of lading entry to review why there are only 2 invoices. Maybe you forgot to enter a bill of lading, or you accidentally distributed it to a warehouse. On our next slide, we have the sales order tax journal. The sales order tax journal summarizes your sales by tax code and sales amount. You can see how much your taxable sales and your non-taxable sales are for each tax code description. This report provides another checkpoint to verify if your taxable and non-taxable sales look correct. There are many more reports that you can print following this report, depending on how you have your sales order set up. Today, I am only going to be showing you the most common reports. So on our next slide, we're going to see our gross profit journal. The gross profit report is vital to your business. Before printing invoices and updating the daily transaction register, this report should be reviewed and approved. The cents per gallon profit needs to be looked at to determine if the gross profit per gallon is correct. My examples show that there are some negatives. This is a red flag that either that either you have something entered wrong or your setups are incorrect. I would stop right here and determine what the problem is. I would then either fix the bill of lading or the setup and then rerun my report. The nice thing about unified bill of lading is that it allows you to do just that. You don't have to do a credit rebill. You can stop at any time up to the point of running your daily transaction register to make your corrections. Once you run the daily transaction register, it is final, and a credit rebill will be necessary. On our next slide, we have our bill of lading daily transaction register. The bill of lading daily transaction register is the first DTR that will print following the sales order journals and invoices. This is also the point of no return. Once you post the DTRs, you will have to do a credit rebill. In prior versions, this report would have printed when you were done entering the bill of lading, when you are done entering your bill of lading, creating a need for a credit rebill if there was a problem found when reviewing the sales order journal. Now the DTR prints after the gross profit report has been approved, reducing your need for credit rebills. The next slide shows our sales order daily transaction register. The sales order DTR is the last report in our unified bill of lading process. This is the same daily transaction register that prints when you update any other sales order batch. The unified bill of lading provides you with ample opportunities to correct problems prior to running your DTRs, which means less credit rebills. And now I'm going to hand this over to Kate, who will talk to you about purchase order.
Thanks, Laurel. So before we can really do a whole lot in our system, we have to get our inventory in. I mean, inventory is the lifeblood of your business, and it begins with receiving products. Purchase order makes ordering, receiving, and invoicing from vendors more efficient. Purchase order uses a 3-way or a 3-step process to verify that the quantity and price ordered is equal to the quantity received, and that the AP invoice matches the quantity and the price as ordered. So it's keeping those 3 steps honest. The 3-step process is why we use purchase order. It promotes reliability and integrity of the financial and operational information in your system, effectiveness and efficiency of your operations, it safeguards your assets, and helps you keep compliant with regulations and contracts you may have with vendors. So what do I do? What do I need, and how do I determine how much? Well, the timely order and receipt of goods is going to ensure that you have the product you need to meet customer demand. But How do you place your orders in the most efficient way and at the right time? In inventory maintenance, the reorder maintenance and corresponding report can assist you in making that order process more efficient. There are 3 maintenance fields to calculate reorder information. The available quantity, meaning what you have in your inventory, the reorder points that are set up based upon your knowledge of when you need to get orders made to receive that product in a timely manner, as well as the minimum reorder quantity. If you don't have hard data that helps you know what those reorder procedures and quantities should be, there are analysis tools that Patty has mentioned earlier that can help you obtain the information needed to effectively use this tool. If you need help with those analysis tools, you can contact our professional services group, and one of us would be happy to assist you with that type of analysis. Internal purchase orders allow an effective and efficient way to transfer product from one of your warehouses to another. This requires the use of an internal vendor for the transaction to suppress postings that we don't want posted. Inventory control team should define a process to document the transfers for capture into mass. The internal POs should be processed as soon as possible to avoid any negative inventory consequences. Using the negative inventory feature to catch any internal POs will help you make sure that you're not missing your order of operations. As you near month end, ensure that the internal purchase order is posting in the correct month, because that's usually when we see issues regarding posting in the incorrect month, and it's pretty obvious how that would affect your processes. Review the sales invoice gross profit margin for this internal sale before update, because many times the transfer may have increased the cost of inventory because of the cost of transfer between those warehouses. If you capture that cost, it's also going to help you reflect more accurately what your profitability actually is. Purchase order open purchases report provides information for all the orders or a selected group of purchase orders, including completed orders, and it can be printed as needed to track the status of each order. It can be run by selection of purchase order numbers, vendor numbers, required expired dates, purchase names, ship-to addresses, and user-defined fields when you're printing. Review the report for purchase orders past expected date. This allows you to find and correct orders received but not entered, as well as what orders your vendors still owe you that you've placed. You can drill down to item detail by using Open Orders by Item report to print open purchase orders by item. That'll help you track outstanding purchase orders for particular items you may need. This report can be used in conjunction with the inventory management reports to determine the products that should be ordered in what quantities and by what dates. You can enter a selection of item codes, item descriptions, product lines, and warehouses for your selection criteria of what to print. The expected delivery report lists all the deliveries expected based on the required date specified for each item on the purchase orders. The delivery date is the date you indicated when you entered the purchase order that each item on the purchase order would be required. This report can assist you in ensuring your vendors are meeting your requests for items in a timely manner and alert you to your warehouse of possible deliveries. Information provided on this report includes the item code, delivery date, purchase order number and date, the vendor number, vendor item numbers, warehouse, unit cost, and the quantity ordered, received, and expected. You can enter a selection of delivery dates, item codes, warehouses, and product lines to print. When sorted by delivery date, the report lists items expected to be received for each date and for each warehouse. When you sort by item or warehouse, the report lists outstanding orders for each item in chronological order. Item totals are provided when the report is sorted by item code or by warehouse and item code. The receipt of goods entry is the next step in the purchase order process, and it's used to enter the quantity of goods that you've actually received and apply that information against the outstanding purchase orders. You can also enter and maintain purchase and ship-to address information. Information for goods received for which there is no corresponding purchase order can also be recorded. You can record the receipt of goods and invoice simultaneously if the delivery of goods includes the invoice. So if when you actually receive that, if the driver hands you an invoice at the same time of the delivery notice, you can do a one-step process. Each line item on the Lines tab represents a product or service being ordered or a comment to be printed on the daily receipt registers. You can use the batch method, which would allow you to multiple entry sessions to take place simultaneously in the same data entry task, each with a unique batch number, so you're not bumping into each other between warehouses or staff members that handle that process. You can also receive goods for which there is no corresponding purchase order in this task, but that is not recommended for obvious reasons. Now, Patty went over order of operations earlier, but this is something that you've probably heard from us many times, and you'll continue to hear from us how important order of operations is to the successful operation of your business. So looking at the next slide, as you look at this, this equation, thinking back to what Patty mentioned about PEMDAS, what should the answer be? Well, again, to review the order of operations, we go through parentheses, then we do multiplication and division, and then we do addition and subtraction from left to right on each of those. So there are three things well, there's probably more, but here's three examples of if you do order of operations in different ways, what answer you could get. Well, which is the correct answer? That would be the middle one, because that groups those items that are multiplication and division together. Multiplication happens before division. But if you do order of operations in the incorrect way, you get a different answer. So why is it so important? Well, it ensures your costs are updated for your inventory. Your reports are accurate. You can actually know if you're making money. It prevents negative inventory situations, which preserves your average cost accuracy, reduces your inventory write-offs or adjustments in. It also assists in keeping modules and your general ledger in sync. Now, you've probably all heard the philosophical question, if a tree falls in a forest and nobody's there to hear it, does it make a sound? Well, the equivalent of that in our business is if product comes in, but we don't put it in the system, did it actually happen? And the answer to that question is no. If it doesn't happen in the system, it doesn't happen for all intents and purposes. Packaging is a great opportunity for us to make our lives harder if we don't follow order of operations. In essence, packaging is just like an internal PO, except for many times you're not moving it from warehouse to warehouse. You're simply taking existing product and you're transferring it to a new product at the same warehouse. Using packaging properly requires having procedures and systems in place to ensure the correct order of operations. If we try to be too much of a just-in-time operation, we can run into situations where we don't have packaged quantity on hand for a walk-in customer. So if I've got 5-gallon barrels, or drums, excuse me, buckets, and I've only got 3 on hand, and I have a walk-in customer that needs 5, we typically will say, well, let's make that on the fly, and if they want to pay their invoice then we may have an issue where we're invoicing before we've entered the packaging. We've just sold packaged product that didn't exist in the system. So one observation or recommendation is you can make packaging part of your reorder points analysis when you're looking at when inventory should be reordered. You can use analysis tools to adjust your repackaging amounts for seasonality of the product. If you have something that sells more in the summer or winter, then you would obviously want to have more on hand, and we would repackage in greater quantities or more often. Just like we discussed in inventory receipts and in purchase order, if we don't update inventory in a timely manner, we may not have the packaging items needed for when we want to do repackaging. And if that happens, then we get this when we're entering repackaging. So the system will warn you and tell you you don't have enough inventory to do the packaging batch. Just make sure not to proceed before fixing the issue, because you'll compound the problem if you try to repackage when the inventory hasn't been received already. The next part of inventory is counting. It's probably the thing most people enjoy the very most, and it's obviously a primary control activity. So this is something that you definitely want to get right. You can increase your control of your inventory by doing cyclical inventory counts. It only makes sense that those items that have a greater quantity flow through your warehouse in your inventory would need to be monitored more closely. Cycle counting of our inventory allows you to schedule more frequent counts for those high-volume items. Again, intelligence tools can help you evaluate those items that should be counted more often because of their volume, and some of those may be adjusted for seasonality as well. If you have some items that have a pattern of being off during your physical count that you're making adjustments to, those would also be a good candidate for more frequent counts to make sure that you're not having issues with product walking out of the warehouse. Our relationship with Scanco also provides additional help in performing inventory counts. It can help make it faster and more accurate. If you would like more information about the Scanco partner, you could contact our sales department for more information. For virtually all of you, fuel is by far your highest volume product, so that's something that needs to be counted every day. The tank reconciliation tool makes that much easier. This is in the PetroLink area and can be used for any bulk items that you're storing in tanks, such as lubricants or other products. This tool helps make sure that each day your on-quantity hand and the quantity that the system says you have are equaled up, so you can make sure all sales orders have been processed and all inventory has been received because your physical count and your system count match. Getting cost and pricing right ensures that you make money. Getting the wrong information for pricing or cost, whether that's average or standard cost or price, will make gross profit reporting invalid. And a bad standard cost means bad pricing because most of us are basing our pricing off of our standard cost. Rebates are also an important part of pricing. If you receive rebates from any of your vendors, we want to make sure that we're getting those numbers in correctly so that the reports that show us what we should expect from our rebates, the rebate payments we should expect, are in fact correct when we receive those from vendors. As Patty mentioned before, Visual Integrator can be a huge friend to you when you're trying to keep this on track. So some daily best practices. Before beginning the day, a best practice is to confirm your inventory values by reviewing average costs. This check for reasonability should catch items like negative inventory costs, standard costs that are less than your average cost, and confirm customer pricing is within expected ranges. If a new customer hasn't had pricing set up, the default is going to be the standard price. So we want to make sure that our standard price is also accurate or passes a sniff test relative to our average cost. Also look for negative unit costs, negative quantities on hand. Negative costs and quantities will affect your cost of goods sold, profit margin report, and require credit and rebill to correct those. So I'll give the floor back to Patty. She's going to talk to us about some internal controls related to Cardlock.
Thank you, Cade. In Cardlink, we recommend processing your card updates and account before updating your daily processes. This is another example of order of operations. With CFN, you will download the files from the CFN website and update the changes into DM2. With Pacific Pride, you will make your card changes in DM2 and then upload them to the Pacific Pride controller. An example of the order of operations you will want to update your cost and your price tables daily before you import the daily transactional files. When you process your daily transactional file, you will receive a few reports. One is the credit exception report, which provides a warning for customers who are near their credit limit but still processing transactions. You will want to make sure credit is notified about this. Cardlink alerts and Sage alerts and workflows may be able to help you with communicating these exceptions to the credit department. Additionally, you may receive a log of the rejected transaction. That would be a situation where the card, site, or product had not yet been entered. Take action by correcting the appropriate setups and then reprocess the rejected file. The Cardlink Gross Profit Analysis tool is the single most important thing you can do in your Cardlink billing cycle. It will help you identify incorrect pricing setups, prices that can be adjusted before invoicing, and it could tell you a larger global markup on your remote locations may be required. In the beginning, we recommend that you run this every time you process a transaction file. It will be invaluable in making sure that the pricing setups are correct. At the very least, you should run it before you print your invoices. If you have incorrect pricing and you update your invoices, the only way to correct it is to manually correct your credit and rebills. The gross margin by category tab is the most important pivot report in this tool. You will really want to scrutinize it. The products are listed across, and the margin categories are listed down. If you were analyzing these transactions, the ones that you would want to pay attention to are the first two margin categories. These are transactions that have margins less than 0 or equal to 0 but less than 2 cents. This table is telling us that we have 7 transactions that have margins less than 0, all of which are related to unlead 9.80 product. It also says we have 74 transactions that have margins between 0 and 2 cents. 22 are diesel, and 8 are the unlead 9.8E product, and the 44 are the conventional unlead product. To determine what is wrong, we will need to drill down on the transactions to see where they were made, what the cost was, and what the system thought the price was. Using that information, we can decide what to do to correct it. There are several other pivot reports in this tool. We suggest you try these before your next invoice run, if not today. Several times we had mentioned opening or contacting a professional services department. So I thought I would just include a screenshot here that would show how to do that. If you go out to our website, www.dm2.com, you'll see professional services as an option on the blue menu. Once you've selected this, on the right, there's the section called How May We Help You, as you see on the screen here. And then if you select I would like to request professional services, it'll lead you through a questionnaire to help us best help you. Thank you for joining us today as we went over internal controls while you work. We went over data integrity, the order of operations, key controls and process documentation, how to create key process documentation, and finally we went over key pre-update controls and reports by major business line. We hope you found this webinar helpful and inspiring to put internal controls in place at your organization. And just as a reminder, coming soon there'll be DM2U internal control classes. Thank you, Tom.
All right. Thank you, Patty, and the rest of you. Nice job. Before we open it up for questions, I'd like to remind everybody or put a plug in for the next webinar. We've got the third part of this 3-part series, Internal Controls Part 3, Before You Get Started, is going to be held on June 12th at 11:30 a.m. Pacific, 1:30 p.m. Central Time, so same time, same place. Pretty much, as I said last time, we usually shoot for the second Thursday of every month unless it's too close to the beginning of the month, and then we may make it the third Thursday. But anyway, we invite you to join us to learn what you need to do to get started to use internal controls to help identify and prevent potential problems before they happen. The next slide that Patty has up, we actually just added 4 new DM2 University classes to our schedule. You can see them all here. This is actually a screenshot of what you'll see if you go to our events calendar on our website. And as Patty showed you earlier, if you go to the How May We Help You drop-down menu that you'll find in the top right corner of every one of our web pages, you'll have the ability to open that up and choose, I would like to register for a DM2 University class. And then if you go to the events calendar and open up each one of these events, you'll see the full details on what these classes are going to cover. And just one other thing to add to that is these are all being, the instructor for these classes is Denise Austin. Denise is not only a professional service consultant for DM2, but she holds a SAGE certification for training. So she is actually going to be using the SAGE curriculum that SAGE has spent hours and a considerable amount of money to develop these course curriculums. So you're going to actually be using the same course curriculum that SAGE has developed, and of course Denise is going to tailor that to make it more industry specific. So I encourage you to sign up for those classes. And then next, but certainly not least, is we are bringing back the DM2 Connections User Conference. The last conference was in July of 2011. It's coming back by popular demand. We've had a lot of people asking us to bring that back, so it's coming back July 13th through 15th. It's going to be held across from our headquarters in Vancouver, Washington at the Heathman Lodge. The webinar, or excuse me, the conference is a little bit different than the ones we've had in the past. We've shortened it up, and that was based on the input we got from our customers. They really wanted us to focus more on the higher level, sort of what we call general session material. So we are going to be focusing on that. The conference starts on Sunday the 13th at 5 p.m. with a welcome reception, and it gives you a chance to register. And then we've got a full day of general sessions scheduled for Monday the 14th. And then we do have a half day scheduled on Tuesday. And then after lunch, we'll have a 2-hour voice of the customer session to run some development ideas by you, as well as to get some input on what you think we should do in the future. So we should have the registration page ready to go early next week, so keep your eyes open for that. And as soon as this webinar is over, I'll send out the invitation for next month's webinar. And now we can open it up to questions. It looks like we actually have at least one question so far. This is from, this question is from Max over at TAR. And Max is asking, I am looking for the tank reconciliation tool in Petrolink, but don't see it. We are on version 4.3. Is it called something differently?
Could have a slightly different name. It's the site tank reconciliation, I believe is what it's called. You'll find the setup over on the setup menu. And over there you can set up the actual site number and then the tank number. And then over on the reports menu is where you can go and print the report showing the variance. If you can't find it there, go ahead and just message Tom, and I'll look at your version and see if I can find it for you.
And he has actually acknowledged. He said, thank you. I think I see how it is done now.
Oh, perfect.
So that's good. Okay, that's all the questions we have at the moment. Let's give it one more minute. We're about 29 minutes after. Okay, here's one from Kyle over at EdStop. We've had issues with internal POs overdrawing inventory. Will there be an alert added for this module?
I'd have to go take a look and see. I know that some of our customers have a report that they use that will compare the inventory value to the value on the purchase order and just make sure that the quantity that's being pulled out is correct. Kind of the order of operations piece too would be important to make sure, did we do the receipt from the supplier before we did the transfer? That's generally what we see when that type of thing happens.
Okay, thank you, Patty. We're right at 30 minutes after the hour, so we'll wrap things up here. I just want to remind everybody that today's webinar has been recorded. Once the recording is available, we'll post it on our YouTube channel, and then we'll also put a PDF copy of today's presentation up on our website, and I'll send a message out to let everybody know when they're available to be downloaded or viewed. I know that was a lot of material. If you think of any questions after we close out today's webinar, please feel free to email us at sales@dm2.com. I'd like to thank Patty, Laurel, Steve, and Cade for doing such a nice job with their presentations today. And I would like to thank everyone for attending today's Internal Controls Part 2 webinar. That concludes today's webinar. Thank you very much.
Thank you.
All right, thank you.